UK has been financially cursed for more than 45 years, and this time I'm not talking about antisocial neoliberalism, I'm talking about two economic curses that are widely recognised, the resource curse and the finance curse. Both pushed the pound to become strong and overvalued. Both pulled waves of hot money into the UK, and both helped break our economy by choice. If you care about what is really happening beneath the surface of the UK economy, do not rely on headlines that tell you everything is fine. Subscribe to Economy Ledger now, turn on notifications, and stay ahead of the events shaping your future. The uncomfortable truth is rarely reported, but you deserve the facts before the next shock arrives. The term resource curse was created by economist Richard Orte in 1993. He used it to describe countries with abundant natural resources that, as a result, often grew more slowly and less fairly than countries without those advantages in oil, gas, coal, minerals, timber, or even fishing. The UK is rarely labelled as suffering from this curse, but it absolutely did. From the late 1970s into the early 1980s, we had huge oil and gas reserves, and that same label, usually applied to developing countries and the Netherlands, fits us just as well. Margaret Thatcher faced this windfall in the early 1980s. She knew she was about to receive a massive stream of revenue from the North Sea, mostly off Scotland, and her response was no accident. She chose a political project, and we still live with its consequences. She inherited extraordinary luck. North Sea oil and gas delivered it. Few governments ever get that level of fortune, and she wasted it. She could have modernised manufacturing, she could have rebuilt infrastructure, she could have created a sovereign wealth fund the way Norway did, she could have renewed the industrial fabric of this country and prepared it for future generations. But she didn't. She used it to fund mass unemployment. She financed the deliberate destruction of British industry. She redirected it into tax cuts for the wealthy. She allowed industrial collapse to continue and expanded the power of the City of London over our economy. She burned our future to fuel her neoliberal vision. Demand for oil drove sterling upward. The pound rose in value and stayed above fair value right up until 2008. Oil caused the first surge, and when oil's role in the economy declined, Gordon Brown made sure we fell into the finance curse instead, keeping the pound overvalued for far longer than it should have been. An overvalued pound destroys competitiveness. It makes our exports too expensive, it raises our cost base compared to rival countries, and it lets imports undercut products we could make here at home. The combined impact of oil and the city's hot money hollowed out huge parts of UK industry. Shipbuilding, steel, engineering, textiles, electronics. In all these sectors, most of what once existed has vanished. It's as if we forgot how to make anything except financial products. The government blamed the unions. They claimed British businesses were inefficient, and of course many were struggling in the late 1970s. But oil gave us the chance to rebuild. That chance was wasted, and the inflated exchange rate delivered the final blow. Whatever remained of British business and currency policy after the pound was pushed far above its fair value became the hidden weapon Thatcher used against the people of the UK. Her financial revolution, the Big Bang of 1986, unleashed full deregulation of the City of London and expanded our network of tax haven-linked territories like Jersey, Guernsey, the Isle of Man, the Cayman Islands, the British Virgin Islands, and others that love putting the King's head on their stamps. Out of this came a model of international finance that depended on hot money pouring into the UK. So what is hot money? Sometimes it is illicit capital, other times it is surplus funds from speculators who want the highest return with the lowest tax, minimal scrutiny, and almost no regulation. That is exactly what the City of London offered because of Thatcher's choices, and no government has reversed that path since. Up until the 1970s, the UK made things. After 2000, we have mostly exported financial claims instead. We now rely on hot money to keep the UK economy in balance. The sectoral balance data makes that obvious. Real work has been replaced by rent extraction, and for 4 decades, the Bank of England has backed this approach. Right now, it is holding interest rates too high and pushing ahead with quantitative tightening, which could raise the real interest rate paid by the government and everyone else by almost 1% a year. That matters when the base rate is only 4%. This keeps the pound overvalued, raises our cost base, and deepens deindustrialization. And it continues because the Bank of England wants it that way. Their focus is on the city when it should be elsewhere. And we are still hooked on speculative inflows. The Labour Party encourages them. They call it foreign direct investment, but in reality it is selling anything valuable in the UK to foreign buyers at a discount just to bring in their cash. We are not rebuilding production. We are selling off what remains. The consequences are obvious. What is left of UK industry is still under pressure. Exporters are squeezed. High borrowing costs discourage investment. Production is moved offshore. Trade deficits exist because of policy choices, not because they are unavoidable. Meanwhile, the regions that once had strong industries have been stripped out as London concentrates the wealth. And with that, democracy has been eroded. Governments fear markets instead of citizens. Fiscal rules are designed to calm investors instead of meeting real needs. Finance is treated as the master rather than the servant. So what should we do? We have to break the remnants of both curses. We must end the belief that hot money dependence leads to prosperity, and finance must return to being a public utility. Quantitative tightening must be stopped, and interest rates cannot be used as a lazy substitute for industrial policy when they destroy industry instead of supporting it. Rates must be set for the people who live in this country based on our own economic reality, not to satisfy foreign capital. We also need a modern industrial strategy built around a competitive pound. That is the only foundation for full employment supported by lower borrowing costs, and we need public banks to drive reinvestment when private ones will not. There is another issue we must face. I have spent the last 25 years warning about the dangers of the UK's tax haven infrastructure, and everything I have argued about it still stands. That system must be dismantled because it continues to undermine our democracy and reinforce the damage created by a finance-centred economy. We need an economy grounded in real work, fair reward and democratic control, not the illusion created by these tax haven structures. We cannot move forward while trapped in these curses that were chosen for us by past governments. We need leaders who choose not to curse the country, but to work with us for shared prosperity. That has to be the direction for our future as we move away from everything antisocial neoliberalism has delivered. If this opened your eyes, do not just click away. Stay informed, stay prepared, subscribe to Economy Ledger and turn on notifications so you never miss what is really happening inside the UK economy. Share this with someone who still believes the system is stable and tell me in the comments what you think comes next. Your voice matters, and together we can stay ready for whatever unfolds. I will see you in the next one.